back here with Richard Davis at the White House. Picking up on the conversation, the tone in the room, one of the areas, again, of conflict, disagreement, has been regulatory reform.
Sure.
This idea, the president's talked about this Consumer Financial Protection Agency, has been a non-starter for a lot of banks. Where's the common ground? How do you reach a consensus on that?
First of all, regulatory reform is a lot more than the Consumer Protection Agency, and I think we agreed in that room today that we have a lot more alignment than misalignment. However, we did make it clear that we would like very much for consumer protections to be clear and bright line. We actually welcome non-banks being part of the consumer protection oversight. We still prefer not to have another agency that would intersect with the safety and soundness that our current examiners pursue. But we'll live with whatever outcome comes along. We simply want to make sure that we don't have the misinterpretation that we don't want consumer protection, because that's actually good for all of us and we'll all benefit from it.
Yeah. I know you and Bob Kelly and Valerie Jarrett all talked about constructive conversation.
Yes.
The president said it as well.
Right.
But I got to believe that that there are disagreements here, that you do not see with eye to eye with this administration on some key issues. What for you? Where are you at odds with this president? Where is he wrong?
You know, well, first of all, he's not wrong on anything that he believes, and neither are we. But I think the biggest disagreement would be in terms of our ability to be effective in the recovery and our best efforts. And are we taking enough effort to do what we can to help this recovery and this economy? It's a great example in small business lending. We explained that you don't want us to make a startup small business loan. It sounds attractive, and I'm sure someone wants one, but we didn't do that in any circumstances, and it's not good for this industry, it's not good for this economy to do something now that will be a problem in the future. But are we trying hard enough? That's the question, and we made it clear that we're going to try harder. Whatever we're doing isn't obviously enough. We certainly haven't won over the minds and hearts of the consumers by showing extra efforts, and so we're going to do double looks at each loan that gets turned down. We're going to provide all kinds of feedback to both housing modification and small business programs that are out there today, because we're doing them. We can see where the problems are, and we're going to offer that very direct guidance. And then finally, Peter, I think we agreed that the CEOs have been working toward, but are going to get further along, to be directly involved in some of these activities and not work through the lobbyists as much, not work through some of our proxies, but get directly at the table, work with the administration to bring some of these things to conclusion.
What about executive compensation? You're not a Wall Street bank, but
Nope.
you're the fifth biggest bank in the country. You're growing.
Right.
24 states now.
Right.
There are Americans out there wondering at all banks around the country,
Right.
what are you paying your people at a time we've got 10% unemployment, a lot of Americans hurting?
Right on. First of all, you know, lending is the lightning rod, and lending is the coal to our engine. It really is what banks operate on, first and foremost. So we want to make loans, and I want to incentivize my employees to make loans. We don't have any of those very large compensation packages or anything that fits those high levels of oversight. But by the same token, it's okay in any business to incentivize your employees to do what they need to do for the good of both that company and for its constituents. So you will find that we will continue to support compensation programs that allow for pay for performance at the employee level. And at the higher level, you'll hear, I think in the coming months as the proxy season opens up, that the banks in that room and many that are not present have done a very good job of listening and paying attention and doing a much better job of aligning compensation over time periods that equal the taxpayer and the shareholder expectations much better than they were before.
President Obama said in that 60 Minutes interview, Wall Street doesn't get it. After this meeting, do you think more of Wall Street does?
Every time we get together, it's productive. I must say, we work very well with his staff, and we enjoy working with them. But when we get a chance to meet with the president directly, a lot of learning happens, and we learned that we have done still have a ways to go to communicate better, both to him and to the Congress on our positions. And we learn a lot directly from him on what's most important. And I think we all come from it better. And we did vow together to work very hard and very quickly to move forward, to do whatever we can at this critical point in the recovery to make sure we're part of it.
Let me just ask you finally, if I could, the health of your business right
Yes.
now. You took TARP money, you returned it, among the first to return it. You've been growing since then, absorbing some of the banks that have been in troubles. What's going on? What is your snapshot of the economy, your business right now telling you?
We're optimistic that 2010 is the turning point. We haven't seen it exactly yet, but we can see 90 days quite clearly based on loan performances and payback routines, and we can see where the consumer and the small businesses and the corporate customers are feeling. We're one of the largest payment companies, so we can see customer behaviors every day on debit versus credit, whether they're buying for the holidays, and there's a nice, slow, methodical recovery happening underneath the water here, and you're going to start to see it in 2010, I think, as you see consumer confidence come back, banks efforts to do everything they can to make sure that we're part of this recovery, and just the natural course of a cycle where the end of a recession, which has been very long now, starts to turn. And we have a lot to look forward to. I'm actually quite optimistic.
So double dip isn't in your future?
Is
that
not.
What you're saying?
We don't see it actually under any circumstances from our own experiences, and we're hoping that it doesn't come about.
All right. Richard Davis, thank you very much for the time. Truly a Minnesotan here. You can tell he's absorbing the cold weather
Don't you know?
without even a shake. So thanks again. Appreciate it.